Hi, this is Joseph. It is Friday, May 15th, 2015, and in this video we're going to talk about the trades we executed with the trade copier. So we're currently looking at the dollar Swiss. We had a trade here. It was a bounce and a break outside of this consolidation range. We've got a range with a high there at approximately 0.9170, and then we have a low here of 0.9078. So this was my consolidation range. This is the continuation breakout trade. So we traded this to the upside. It reached the targets within a couple of hours after getting into the trade, and this was as we were approaching and trading during the New York session. So you can see just how pretty consistent this dollar Swiss trade has been for us. We traded a continuation breakout trade to the downside a couple of days ago, and then we had one previously last week, another continuation breakout trade to the downside. And it's been a pretty consistent trade currency pair for me to trade lately. I know that a lot of people have been afraid of the Swiss because of what happened a few months ago, but it's been very, very consistent for me. So this was a profitable trade. And then the other trade we had here was on the dollar yen. This was, again, another range of consolidation. This was a breakout. This was the same continuation breakout trade. So this is very different than the HL30. It's not a reversal off of support or resistance. This is just straight out a breakout of consolidation. So we actually re-entered this trade for approximately 30 pips down here on that signal candle. So this was another profitable trade. And we've also had a couple of other trades. Now, we didn't trade the euro dollar, but it did give a couple of signals. So again, going back to that continuation breakout trade where we're identifying a range of consolidation and then waiting for a signal, this was the first signal that looked like it was going to break out of consolidation. This was to the downside. So once I saw that one, I had to make a decision and confirm it with the indicators, and there was a lot of divergence here on this indicator. So I'll go ahead and show you what that looked like. That signal candle right there, that was the candle that actually closed below support. You can see that the CCI is printing quite a bit of divergence. So it didn't line up. I did not want to execute and sell this trade or this pair any lower because of that divergence. And when I see that kind of divergence, especially in the Bollinger Bands where they're not lining up and confirming, it usually means a head fake. I've got a couple of different ways to determine whether or not this could be potentially a head fake. And you'll notice that in this case, it really was. It totally reversed, went the opposite direction, and then ended up closing above resistance. But I've got some techniques and some strategies that will help me prevent getting into these sell opportunities when they look good, but then they turn around and go right back up inside a consolidation. So now we have a closed candle above resistance, and that printed just a couple of hours before the market closed for trading today. That has a high at 1.1466. So using a 3-pip entry, I can't get in until 69. And this trade could potentially pay approximately 55 pips. So waiting for the market to, when it opens for trading on Sunday or Monday, depending on where you live, we could see price bounce and take off and continue in the direction of this breakout. Otherwise, if I never see a 3-pip entry, I will not be going long this pair. And that means it'll probably come back down inside a consolidation again. So we'll have to wait for that one. And then the other trade that almost set up was here on the pound dollar. This one continues to move inside of consolidation, but I want to draw to your attention a couple of different ranges and levels of support and resistance. Here I have Thursday's high up here at 1.5814, and then I have this low on Wednesday, and that was here at 1.5633. That's my range of consolidation, and I'm using this on a 1-hour time frame, waiting for a 1-hour candle to close outside of this range, and then confirming it with the CCI, the Bollinger Bands, and the MACD histogram to make sure that I could expect that the trend's going to continue in the direction of the trend or the breakout. So please keep in mind, if you're going to try to execute this trade on your own, if you see a 1-hour candle close outside of this range, we need all three forms of indicator confirmation to line up correctly. Otherwise, they could lead to a head fake, which is what we saw here on the euro dollar originally this morning when it closed to below support and looked like it was going to continue lower. It created that head fake and went back the other direction. So again, a positive winning trade. We never have a losing month. All of my subscribers receive the same results. And you could do the same thing with the trade copier. All you've got to do is sign up to use the trade copier. We've got just a few more days left, and then the trade copier is going to switch over to a monthly subscription service. I'll continue to offer it to those who buy it with the one-time payment. They can continue to have it at a one-time payment. They never have to make any other payments. But after May 21st, it is going to change to a monthly subscription service. So there's just a few more days to get the service, and you have lifetime access. And I include my guarantee policy. Thanks for watching this video. I hope you had a great trading week.